Hello, and welcome to the Drug That Debunks Free Will episode of Slate Money, your guide to the business and finance news of the week. I'm Felix Salmon of Axios. I'm here with Emily Peck of Axios.
Hello, hello.
I'm here with Elizabeth Spiers.
Hello.
And most excitingly, I have some frabjous news for you coming in on very short notice to be amazing as ever. We have the great Cathy O'Neill. Welcome.
Thanks, Felix. Great to be here.
Cathy, welcome back. You are the OG co-host of Slate Money. You know these vicinities very well.
Do you know, it's like the first time I visited in a while where I'm not talking about a sex toy. Unless you want to talk about a sex toy. I mean, that's fine too. It's true. We do a bunch of Cathy O'Neill stuff on this episode. We talk about weight loss. We talk about algorithms. We have a whole Slate Plus segment on etiquette and whether you can DM people in the middle of the night. You and I are right about this. Emily and Elizabeth are wrong.
Wrong.
Facts. That checks out.
We also have a segment on the New York Stock Exchange and flash crashes and what's going on right there. But yeah, it's just amazing to have Cathy back. Welcome back.
Thank you. And bring me back anytime.
And we will bring you back soon. And in the meantime, make sure you listen all the way through to the Slate Plus because we need your votes, people. It's all coming up on Slate Money. Slate Money is sponsored this week by Washington Wise. Decisions made in Washington affect your portfolio every day, but which policy changes should investors be watching? Washington Wise is an original podcast for investors from Charles Schwab, unpacking the stories making news in Washington and how they may affect your finances and your portfolio. Listen at schwab.com/WashingtonWise.
It's time to reboot your credit card with Apple Card. Apple Card is designed to help you pay less interest. Unlike other cards, it estimates how much interest you'll owe and suggests moves to help you pay off your balance faster. Also, you can keep more of your money. Apply now on the Wallet app on iPhone and start using it right away. Subject to credit approval, interest estimates on the payment wheel are illustrative only and may not fully reflect actual interest charges on your account. Estimates are based on your posted account balance at the time of the estimate and do not include pending transactions or any other purchases you may make before the end of the billing period.
So we haven't had a regular episode of Slate Money where we just talk about the news for a couple of weeks. But the big news that happened a couple of weeks ago, a week and a half ago, something like that, was that the entire fucking stock market broke. And in the way of such things, it merited like small headlines on page 16 of the business section or something. And no one seemed to care. But shouldn't we care about this, Cathy?
Personally, I didn't even know it happened until you invited me to speak on Slate Money.
You have completely proved my point here. Now that you know that it happened.
Yes.
Is this like a curious intellectual thing for you, or do you think it matters?
I don't think it matters, and I'll tell you why. Like, when the flash crash happened, like whatever that was, 10 years ago or something, it did seem important. But at the same time, it sort of after the fact, it seemed like a lot of the sort of bad trades that happened as a cause of the flash crash were like corrected. So now I kind of have this theory that these momentary blips in the market can most of the time mostly get fixed by investors that can probably afford it. So it's just not a big deal to me. It's not as if it's like a fundamental weakness of the economy that we're all going to care about.
Right. So let's do a quick recap first, which is basically that, well, the stock market broke. The prices weren't clearing at sensible prices. It was basically a mini flash crash that lasted for a few minutes. And you're absolutely right that in the wake of it, the New York Stock Exchange tore up a whole bunch of trades that had happened at very outlandish prices. And so the people who were harmed the most probably may not have been harmed quite as much as they initially might have feared. And in fact, one of the reasons I think you're absolutely right that people don't care very much about these things is that it's hard to identify victims, because for every buyer, there's a seller. For everyone who sold at a ridiculously low price, someone else bought at a ridiculously low price. There was a winner and a loser, and they don't fall into easy buckets of like the people who lost were like this and the people who bought, who gained were like that. It's not like the high frequency traders made lots of money and the big, real money investors lost lots of money or anything like that. And so without an identifiable victim or some kind of poster child for like, this is why it's bad, like, yeah, as you say, people don't seem to care this much. But I do think it's bad, and I'm going to talk about why. But let me do a quick gut check with Elizabeth first. Do you care about this?
Not really. I feel like anything that doesn't produce just a cascading series of disasters, I think I care less about. So,
Emily?
Yeah, I care about it.
Good. Sure. Okay, Emily and I can be on the this matters side of things. Emily, what's your big picture, like why we should care about this?
Well, a lot of our economy, the stock market does matter to our economy in ways, for reasons. And the error here was caused by someone not being at work to push a button, basically, to shut off the system.
Yeah.
So this really important market has this vulnerability where like it's up to a person and a switch at the end of the day. And I was sort of surprised by that. And we'll talk to Cathy later about algorithms and AI and like the pitfalls there. But this seems like the other end of that, the pitfalls of just having humans in charge of things and how they screw up. And it also bothered me how the NYSE, the New York Stock Exchange, messaged around this, because at first they called it a technical glitch. And then they called it a manual error involving its disaster recovery configuration. Again, it was like a lady who didn't have her job anymore, so no one turned off the thingy. Like it's just, I think, worth thinking and talking about and having them look into it so things like that don't happen again, because yeah, no one got hurt this time, but I don't know.
I think people did get hurt. I think we don't know that no one got hurt. And in fact, we probably do know that some people got hurt. There were some people who lost significant amounts of money, hundreds of thousands, maybe millions of dollars as a result of this. There's always going to be a point at which the trades are no longer torn up, even though they're clearly wrong. And there were some people just on the wrong side of that point. So yeah, there will have been losers. It's going to be hard to identify them. I don't think any journalists have identified the losers. Cathy, you don't care about these losers.
Well, listen, I don't want to sound cold-hearted. No, I think it is important what you said. Like, there's no Michael Lewis bestseller coming out of this because there's no victim, right? But there are people that lost money. But I would say, I want to put this in a different framework. Like, people lose money when there's hurricanes or tornadoes and natural disasters, and it's terrible for those people. But it's not like there's no way to anticipate that. That's why we have flood insurance, things like that. So I suspect that many of the people who are big players in the market perceive and understand and even measure this risk, the risk of the sort of infrastructure of the NYSE itself risk.
So I can actually answer that question. And the answer is, there are many, many people, like deep market structure geeks, who are hyper aware of this risk.
Yes.
But there is actually no way of hedging it. There is no way of insuring against it. The only real way of insuring against it is for the NYSE to get its shit together and to be efficient. And one of the interesting things about your analogy with hurricanes is that, just like hurricanes, flash crashes are becoming more frequent and more damaging over time, and especially since 2005. 2005 was when this thing called Reg NMS came out, which was basically when you had this big proliferation of stock exchanges in the United States. Like, there used to be just the NYSE and the NASDAQ. Now we have like 16 of them, most of which you've never heard of. And that was basically when stock exchanges went from being this kind of utility, which allowed investors to try and trade with each other in a mutually beneficial way, to being highly valuable for-profit enterprises that, it wound up doing whatever the big banks and the big high-frequency traders wanted them to do because that's where the money was. Yep. And that's when flash crashes started. Now, flash crashes happen every day.
Yeah.
I can tell you, like, yesterday, on Friday, I don't know what stock it was, but I can guarantee you that there were a few stocks on Friday that just had weird, glitchy flash crashes, and their stocks fell enormously and then bounced back in the course of a fraction of a second or maybe a couple of seconds. This happens all the time. It never used to happen before 2005. Very, very, very rarely used to happen.
You're kind of proving my point. Like, number one, like what Emily said, somebody forgot to press a switch, somebody forgot to do something else. That's going to be automated tomorrow. But then other problems are going to happen because of the complexity of the situation. It's almost chaotic, and it will lead to these flash crashes. And I guess my point is that anybody who's working and thriving in that ecosystem is sophisticated and knows that this is kind of a risk is happening and is measuring that risk.
Yes, you're right. The people who are thriving in that ecosystem are actually at the margin making money from it. They're the high frequency traders, the bankers, that kind of thing. The big losers, and there are big losers here, are the big real money investors. And this is the big beef that I had with Michael Lewis's bestseller, Flash Boys, right? When Michael Lewis wrote that book, he needed a sympathetic victim. Yep. And so in that book, he painted the victim as being like mom and pop investors who are being front run by HFTs. And the fact is that mom and pop investors are not the victim here. Mom and pop investors are just fine. The retail investors are just fine. The victim here are the really, really big global insurance companies, pension funds, pools of like real capital that have to be able to buy and sell billions of dollars worth of stock as part of their job. They lose money by trading in the stock market. The friction they see by running into these flash crashes, running into these HFTs, running into these front runners, running into this chaos, running into all of this chaos, which, by the way, I should repeat, is getting worse all of the time, is really large, quite measurable, runs into the billions of dollars, and no one really sees it because it's just a bunch of execution traders at obscure pension funds who are tearing their hair out every day trying to work how to optimize their VWAP, which stands for volume weighted average price. But like it's a hidden problem, but it's a very expensive problem, and it's an unsolved problem. And it was a solved problem, and then various regulatory actions happened, mostly around Reg NMS, and various for-profit actions happened around the exchanges, and it got much worse. And I have a solution to this problem. Like, the fact is that this isn't just a function of there are more computers and more sophistication and less latency, and that's just going to cause chaos. Like, this is by design. The definitive book on this is called Darkness by Design. It's by this guy, Walter Matley. It's really good. And he really shows that all of this chaos is being designed and built in by the exchanges and the HFT so they can make more money at the expense of everyone else.
And those pension funds are filled with mom and pop type people, regular normals, we should
Exactly.
say.
And one of the points I made in my review of that book was that, like, when we talk about small investors, we think that's the little guy. But in fact, that's rich people. People who are rich enough to be able to invest directly in the stock market are the rich. They're not the poor. The poor are the people who have, who are members of a union and have a pension fund. And then that pension fund is invested in, the stock market, and the pension fund is $100 billion. Those are the people who are losing out.
Mm-hmm. Yeah, but can we distinguish for a minute between the systemic problem of more flash crashes happening for the reasons that you articulated, and then what happened with the NYSE, where somebody just didn't press a button? Those seem like different problems.
They are not different problems. They do seem like different problems. You're absolutely right about that. But in fact, they're the same problem. And what it comes down to is the thinness of regular trading. Like, the one place you never see a flash crash is at 9:30 in the morning or 4 p.m. right? Those are the only two times over the course of the trading day where you actually have like an efficient auction where you can trade in quantity. Between 9:30 and 4, you have this thing called continuous trading. It's between 9:30 and 4 that you have flash crashes. Not only the big one in 2014, but all of the mini ones that happen every day, and also the mini one that happened last week. Well, it's a bit weird, right? What happened last week was there was no 9:30 a.m. opening auction, and you move straight into continuous trading. And without that anchoring mechanism of the opening auction, the continuous trading proved that it was completely incapable of actually dealing with the volume of orders that hit the stock market every morning. All of these orders hit the stock market and the prices went haywire because the standard way that the stock market works on a millisecond to millisecond basis just cannot cope with that kind of volume. What we want is a stock market that can cope with volume. And the way you do cope with volume is you do what we did at 9:30 a.m. and what we normally do at 9:30 a.m. and what we always do at 4 p.m., which is just have a big auction and say everyone who wants to participate in the opening auction or the closing auction, everyone just get all your bids in and we'll have we'll find a market clearing price. And that works twice a day. And it works when you have like IPOs. There's a big opening auction where the stock goes public and it can take, a couple of hours sometimes for that price to appear. But when it appears, it's a big market clearing price and everyone is happy. And the solution to all of these problems, including the solution to the problem that Michael Lewis puts forth of like the little investors getting front run, is just have auctions. Don't do continuous trading.
First of all, I want to completely agree with you that the people getting screwed last week, but on a daily basis, are the big pension funds. I personally left my hedge fund because I couldn't sleep at night because my job was literally to front run hedge funds, front run pension funds. But I think importantly, I wasn't a high frequency trading quant. I was a mid frequency trading quant. So I just want to make the point that even if we have many auctions during the day, I mean, there would have to be many. I don't think 5 would be enough. Like you could still front run pension funds. So that problem is not going to go away. And the reason you can front run pension funds, by the way, is because they say in their definitions how they're going to trade.
Well, some of the index funds do that. But the other reason you can front run pension funds is because there is a very, very public order book on the New York Stock Exchange. This is the way that continuous trading works, where, a huge number of orders are public and everyone can see where the orders are and where the bids are and where the offers are. And you can front run that. In the case of auctions, but at least you get rid of that problem.
You get rid of flash crashes, but not front running.
And you get rid of some front running, not all.
Yeah. Don't worry. Pensions are going away anyway. So.
That's a good point, Emily. That's actually a really important point.
We'll be right back after an ad. Slate Money is sponsored this week by ZipRecruiter, and Valentine's Day is coming up, and I'm sorry, but there's no amazing matching technology that will easily find the right person for you. But if you're hiring, there is technology that can quickly help you find the right person for your open role. It's ZipRecruiter's matching technology, and right now you can try it for free at ZipRecruiter.com/money. So find candidates you're crazy about with ZipRecruiter. Employers love ZipRecruiter. In fact, 4 out of 5 employers who post on ZipRecruiter get a quality candidate within the first day. See for yourself. Go to this exclusive web address to try ZipRecruiter for free. ZipRecruiter.com/money. Again, that's ZipRecruiter.com/money. ZipRecruiter, the smartest way to hire. Slate Money is supported by First Republic Bank, which, full disclosure, is my bank. Banking should be about more than checking and savings. It should also be about building relationships, the kind where you can share your financial goals and get the services that are right for you. With First Republic, everyone gets a personal banker who will sit down and learn about you and your goals. You're then connected with specialists and solutions you may not have considered. Isn't it time you align yourself with a bank that believes in you and your future success? First Republic is ready to be your financial partner for life. To learn more about First Republic's extraordinary service, visit firstrepublic.com. That's firstrepublic.com. Member FDIC, equal housing lender.
It's time to reboot your credit card with Apple Card. Apple Card is designed to help you pay less interest. Unlike other cards, it estimates how much interest you'll owe and suggests moves to help you pay off your balance faster. Also, you can keep more of your money. Apply now on the Wallet app on iPhone and start using it right away. Subject to credit approval, interest estimates on the payment wheel are illustrative only and may not fully reflect actual interest charges on your account. Estimates are based on your posted account balance at the time of the estimate and do not include pending transactions or any other purchases you may make before the end of the billing period.
But Cathy, the reason why we needed to have you on this week was not to talk about your, to be regretted tenure at a hedge fund that shall remain nameless, but rather to talk about it's the algorithms. They're coming to get us again and they're terribly racist. What's the latest version of this?
The latest version of this comes from the IRS. So the IRS decides with an algorithm who to audit. And they are deeply underfunded at the IRS. So the people that are in charge of the audits just don't have very much manpower. So they basically only do really easy things for the most part. I'm not saying they never do hard things, but they use this algorithm to sort of define sort of easy wins. And what they do is, first of all, look for predominantly people that qualify for Earned Income Tax Credit, EITC, which you only qualify for if you make the median salary or less. So it's relatively poor people. And then on top of that, like if there's any kind of business income, they throw you out because that would require too much hands-on manual work. And there's some kind of mistake that is commonly made that they look for, some kind of credits, other credits being suggested that you're owed when it's not true. And of course, I just want to preface this by saying, like, the tax law is so complicated. It's really, really easy to make mistakes. But at the end of the day, what they've winnowed down is a group of people to audit super easily, and they know they're going to win every time, that they know they've caught somebody. Those people happen to be much more disproportionately African American than the average taxpayer. And so that was the study that was done.
In a weird way, I want to say that, like, the fact that there is this unintended disparate impact of the EITC claimants who get audited, and they are way more likely to be Black than the percentage of Black Americans in the population, is very bad, obviously, but it's also one of the reasons why the Treasury Department and the IRS cooperated in this study, handed over an enormous ream of, like, the full audit data for all of 2014. They really, did a lot of, they worked with Stanford very closely here. And I feel that, like, it's so blatant and the figures coming out of this study are so stark that maybe, just maybe, this will provide the kind of impetus to clean up this ridiculous IRS auditing algo that if we didn't have this disparity, it would have just gone on like this forever.
Yeah. So number one, I just want to commend the folks who did this work. And yeah, it's amazing that they got access to that data. This is exactly the kind of work I do. This is what I do at Orca, my algorithmic auditing company. The hard part, obviously, is getting access to that data. So it's amazing that they did that. They even use the same exact race inference methodology that we use typically. And so, in other words, like, there is no stated race on the IRS form, as you well know. So the way they inferred that Black people were being audited more often is they sort of inferred the race of the audit targets using something that is basically best guess at what you filled out in the 2010 census. That's the sort of most efficient way of describing it. And so good for them for doing this. But I do want to, like, back up for a second and just say, like, number one, it's outrageous and easy to talk about the racism that is clearly here. I mean, because here it is. They found it. They measured it. But, one of the reasons we talk about race as a category instead of class as a category is because race is a protected class under law, whereas class is not a protected class under law. In other words, and the reason I mention that is because like what this is really doing, even more than it's being racist, is it's going after poor people for audits. And I think, since there's a correlation between race and class, it's also going after Black people, but it is much more directly going after poor people.
There is a massive spike. If you look at the chart in my newsletter this week, there is this ridiculous spike in the percentage of people who get audited, like around $20,000 a year, which like is just so intuitively obvious that if you wanted to catch the people who are cheating the treasury out of the most money, you would not audit people earning $20,000 a year. You would audit people earning $2 million a year.
Exactly. Yeah. So what is this story about? I mean, the story is about what we just said, but I think it sort of at a very high level, it is much more about the way that we have, as a country, we've, underfunded and undermanned IRS so that rich people get away with tax evasion and poor people don't. And we can pretend that we still audit people by pointing at these poor people that we've found making mistakes. But, I learned from this story this week that just because I've had an accountant for the last few years, and I've, named myself as a private businesswoman, I'm never going to get audited. It's a protection. It's a protection to have accountants and to have a business on the side, because no manual auditor is going to be assigned to my case. And I just think it's completely outrageous at that level that only poor people are getting audited. And I think that should be really the headline here.
Yeah, it also, I think, speaks to the incredible complexity of our tax code, where no normal human can do their own taxes if they're even a little bit complicated. I think that's part of what causes these structural inequalities. If you have part-time work, or as many people in the U.S., now are gig workers, doing your own taxes is difficult, or you might be paying an accountant who is not that good. So these mistakes are really easy to make. And people, at a higher income level have armies of accountants and lawyers who will keep them out of trouble. But we just don't have the infrastructure for that if you're lower income.
Well, the infrastructure should be coming. There is a bill in Congress basically instructing the IRS to go out and build file your taxes online at the IRS website, which Emily is shaking her head saying but the fact is I have a little bit of optimism about this one. Like the optimal solution here, and Emily, I think you'll agree with me on this one, is the overwhelming majority of taxpayers don't file taxes at all. The government knows exactly how much you earn because it's reported by your employer, and they send you a thing in the mail every year saying you have had this much money withheld from your paycheck. This is how much you owe. This is how much your refund is. If you want the refund check, just sign here. That's your tax return. We'll send you the refund check. You don't need to file any taxes at all. If you want to go through the whole palaver of filling out the whole tax return and working it out yourself, you're perfectly welcome to do so. But for most people, you would never need to or want to, and it just happens automatically. That's the first best solution, which happens in most sensible countries in the world. The second best solution is at least have a free way of filing your taxes, which, at the IRS, which the IRS is now in the early stages of building and will obviously be better than TurboTax because TurboTax is terrible. But Emily, tell me why you were shaking your head.
Because it's not just that the IRS is underfunded and doesn't have the resources to audit wealthier people. And it's not just that they don't send you a bill and make it easier for you to file. It's the whole tax code, everything needs to be thrown out, because there are people who just are paying their taxes. They're not doing anything wrong, like me, Felix, anyone who has a full-time job. Your taxes get taken out of your paycheck. The government knows how much you owe, how much you paid. They know it all. For wealthy people who don't have jobs, who aren't full-time employees, The shenanigans are off the charts. The way the tax code and tax laws are written, there's so much you can do to avoid paying taxes that's perfectly legal. It wouldn't matter if the IRS had all the funds in the world to audit these people. There's a great piece by Evan Osnos in the New Yorker, maybe like 2 weeks ago, that kind of goes through all of this, how the Gettys are avoiding paying taxes with trusts and shelters and having business meetings in Nevada instead of in California to avoid taxes in that state. I mean, it's just so everything, the unfairness is so baked into this system. It is appalling on so many levels.
So I would like to volunteer. And if anybody who works at the IRS is listening, this is for you, to help build an algorithmic auditing, system for all tax returns. I'm going to help you guys figure out a better way of figuring out target audits. Because yes, Emily is absolutely right. That tax avoidance, verging on tax evasion, is so rampant in the upper echelons of society. But there doesn't seem to be any algorithms that actually try to find those things. So here I am raising my hand. I will help develop that algorithm.
So actually, funny you should say that, Cathy, because Dan Ho, who's one of the authors of the paper, who works at Stanford, and if you're listening, Dan, hello, he emailed me and said, one thing to keep in mind is that these disparities stemmed from legacy systems at IRS, not any form of fancy AI, right? So this is the first thing to remember. This is not like some weird, like incomprehensible algorithm. It's a very basic flowchart. It's very clunky 1960s technology, really. And then he went on to say, in fact, assessing the possibilities for machine learning is what led us to uncover these disturbing disparities. In other words, he's like, because if you look at the paper, he's like, if you do clever ML like forest things, which, this is where it started rapidly getting out of my depth, but Cathy understood it all. Like, you can be much better at targeting precisely those, whales who are evading taxes, rather, where the real tax evasion happens, rather than the minnows in the EITC claiming classes.
I would even go further, Felix. You can not only find people who are straight out lying with better techniques, but you could also, as an IRS, as an institution, figure out the loopholes. Where are the loopholes? Where are the new loopholes? Because that is a kind of fraud detection ML that exists now. Like, who's paying much less than we would expect them to pay, given what they're telling us? Right. That is a way of discovering the new loopholes, which are not typically illegal. They're just gray areas. So it would just be a way of detecting the existing loopholes. I think there's a lot of potential in there.
I will say that the world's biggest tax loophole is one that the United States uniquely has closed. And the one reason why, and everything that Emily said is right about the rich evading taxes, and it's or avoiding taxes, I should say, because a lot of it is legal. But the number one biggest thing that rich people do in virtually every country on the planet, with the exception of the United States, is that they simply move their money offshore, or they move to a zero tax jurisdiction like, Switzerland, and boom, they pay no taxes. And it's very easy to do that. United States citizens uniquely cannot do that because the United States taxes you on your global wealth and your global income. And it doesn't matter where you live, like, you're still subject to US taxes. And so while tax avoidance is indeed rampant among rich Americans, there is a limit to how much they can do compared to rich people in almost every other country. And I'm going to come out and say that the very, very rich Americans ultimately, while they do avoid taxes, end up paying a substantial amount of taxes that they wouldn't if they were any other nationality. Like, for instance, Elon Musk, right? He is paying untold billions of taxes right now because he's done all of these share sales of Tesla, and it's very public, and he has to pay those taxes. If he was any other than that, if he wasn't a US citizen, then he would just make sure that he was domiciled in some zero tax jurisdiction when he did those share sales, and then he wouldn't pay any taxes.
So it's horrible, but not as horrible as it could be.
How does that weigh against, policies where Elon Musk is also getting incredible tax breaks that we allow as a matter of policy in this country because there's political will to do it and to protect the rich as a protected class? Not literally protected, but
the one thing I would add too about the IRS going after poor people for filing their taxes is that it's just another example of how the United States makes it really difficult for lower income people to get the benefits that they're entitled to, while at the same time giving benefits to rich people all the time and not shaming them for it.
Yeah, there's an
intentional they should be
administrative burden for poor people, and that is absolutely a matter of policy. It's the sort of idea that if you're less wealthy, you're more likely to cheat on these systems. When we all kind of know that rich people are the ones who are using these incredible tax avoidance schemes that sometimes veer into tax evasion.
Yeah. And the one other thing I would say about that is that because there is this problem with auditing on the EITC, people don't always file for it. They're like, I don't want to be bothered. And so it discourages people from getting this money that it really helps lift a lot of Americans out of poverty. The EITC, for this fault of these audits, I mean, it's a successful tax credit, and people get thousands of dollars, every year that helps them make ends meet, feed their family, whatever they need. You know what I mean? So discouraging them from getting that money it's really shameful.
And we'll have some more Cathy O'Neill pearls of wisdom after this. Slate Money is sponsored this week by Washington Wise. Decisions made in Washington affect your portfolio every day. But which policy changes should investors be watching? Washington Wise will help you answer that question. It's an original podcast for investors from Charles Schwab, and it covers the stories making news right now. Hosted by Mike Townsend, who's Charles Schwab's managing director for legislative and regulatory affairs, it takes a non-partisan look at the stories that matter most to investors. Tune in to hear about the policy initiatives for retirement savings, taxes, and trade, or hear about inflation fears, the Federal Reserve, and how regulatory developments can affect companies, sectors, and even the entire market. Mike and his guests offer their perspective on how policy changes could affect what you do with your portfolio. So download the latest episode and follow at schwab.com/WashingtonWise or wherever you listen. This episode of Slate Money is brought to you by Progressive Insurance. You are not just listening to Slate Money, are you? Be honest, you are probably doing something else at the same time. You are cleaning or exercising or walking down the street or grocery shopping, but so long as you're not in a moving vehicle, there is something else you could be doing right now, which is getting an auto quote from Progressive Insurance. It's easy, and you could save money by doing it right from your phone. Drivers who save by switching to Progressive save nearly $700 on average, and auto customers qualify for an average of 7 discounts. So multitask right now. Quote your car insurance at progressive.com to join the over 29 million drivers who trust Progressive. Progressive Casualty Insurance Company and affiliates. National average 12-month savings of $698 by new customers surveyed who saved with Progressive between June 2021 and May 2022. Potential savings will vary. Discounts are not available in all states and situations. Let's move on to, the one thing I'm very bad at is remembering the names and pronouncing the names of drugs. So, Cathy, can you drop the names of some drugs into this here gab fest?
Well, I was just going to say, what a fantastic segue to the I want to push my book a little bit, which is called The Shame Machine. And it's very related to what you just described, what I would describe as poverty shaming, and putting administrative burdens on people and basically making them feel like they're not worthy and not actually eligible for the things that they are. They should be ashamed for taking that stuff. So The Shame Machine came out last March. One of the major themes in the book is the fat shaming I experienced as a child, and the sort of diet industry and the weight loss industry. And so when I've been reading up a storm, and of course, because I wrote that book, people send me stuff, but I've been reading up a storm about Ozempic, Felix, the thing you forgot how to pronounce. Ozempic is the newest.
Okay.
It's the newest weight loss miracle. And when I say the newest, it's actually one of two. Diets don't work. They charge us money, and then they make us feel like we failed when they fail. So we could go into that. But let's just talk about two things that do work for actual long-term weight loss. The first is bariatric surgery, and the second is Ozempic. And it's just bariatric surgery is a big thing, and not everyone should do it. People who do it often end up having lots of vitamin deficiencies, and it's of course actual surgery, which is real, even though it's laparoscopic and pretty safe now. But Ozempic, that's just something literally showed up a few months ago, and you just shoot yourself with a needle into your thigh once a month, and you lose 35 pounds. And it seems like a complete miracle, and it is kind of a miracle. So that's one thing to keep in mind, although it does make us question our notion of free will. But the other thing that's happening about it is the economics of it. Namely, it costs $1,000 a month. So you can think about who needs such a medicine, because it's actually primarily meant for diabetes, but it ends up making people lose a lot of weight. Who needs that? Versus who can actually afford it? And when is it covered by insurance? The situation now is that it's being used essentially by rich people in gyms. And people like the gym culture folks are totally into it. And the folks that actually probably would need it more don't have access to it for the most part.
I feel like Ozempic just showed up on the radar. I had kind of saw a few headlines about people having to choose between their butts and their faces. And I was like, that's a weird headline, but I don't have time for this. I cover business. But then you wanted to talk about it. So I've been reading about it, and it's just taken everyone by storm. There's all these stories of Hollywood actors saying I don't take it, I do take it, I took it, but I feel bad about it. And then a piece in the New York Times saying, if you take it, your face will look really bad. So then you have to have not only pay $1,000 a month to inject it, which you have to do forever to keep the weight off, by the way, which sounds bad to me. But then you pay thousands of dollars for the plastic surgery to fix what happens to your face when you lose a lot of weight rapidly. And yet I will say, I'm so bought into the shame that you speak of, Cathy, that I was like, should I do this?
Yeah. The thing about it is, Emily, number one, everyone's bought into it. It's not a rare thing. It is part of our culture. and a large part of it, and this is the irony of a shot that makes you lose weight, is that it's supposed to be a moral failing if you have weight that you don't want, right? And yet, and that's, by the way, to your point, people aren't admitting they're taking it. They want people to think, I lost this weight, honorably, quote unquote.
Because I'm virtuous.
I did the work.
I did virtuous things with my
ate
food.
Clean.
Yeah.
There's another thing I think we have in American culture that's just uniquely puritanical, which is that we think that there's some kind of moral virtue in suffering, and we kind of build it into the system. So if you happen to lose weight, the traditional way pre-Ozempic via diet and exercise, there's an idea that you earned it somehow. And then if you are able to lose it via just taking a shot, that you're cheating on some level, which is, I think, morally backwards.
It is absolutely morally backwards. And if you want to read 300 pages about this, that you definitely should read The Shame Machine. But I want to back up a little bit and just take note. I don't know if this is a related thing, to me anyway, that the Pediatricians Association of America, or whatever they're called, recently put out new guidelines for childhood obesity, which basically says intervene immediately, including at the age of 6, intervene for a child that's overweight. What that's going to look like, even though they say do it in unstigmatizing ways, nobody knows how to do that. So what it is actually going to look like is putting 6-year-olds on diets. And they also recommended Ozempic for the age of 12 and up. So that's what it's going to look like. It's a shit show. But if you go even a higher level, I want to make the point that we don't know what what is causing people to gain weight. We actually don't know. One thing that doctors finally agree on is that it is not a matter of willpower. It's some kind of environmental factor, possibly even related to the way we do our farming. The kind of fertilizer ingredients could be sort of screwing up our systems. We actually have no idea why it's happening, but the idea that we're going to sort of pull aside 6-year-old kids and tell them to solve that problem that we don't know how to solve is actually disgusting to me, because it is going to lead to a lot of shame.
There is clearly, if you look at photographs of Americans from, it doesn't matter when, the 30s, 50s, 70s, we were all as a country much thinner. There is, as you say, Cathy, something societal going on here, as like Americans in general have got heavier over the decades. And the solution to that problem does feel like it ought to be societal and happen at a big picture, sort of top down level, rather than at a kind of finger pointing bottom up level of like, you're an overweight 6-year-old, get thee on a treadmill.
I was wondering if the efficacy of Ozempic kind of helps move the notion forward that weight gain and obesity is not a matter of pure will or individual responsibility. Like if there's some like silver lining there that, doctors are kind of waking up to this finally. I think I just read a Times opinion piece on this.
There was a Times opinion piece on this. Now, I'm glad you brought that up, because I keep on coming back to that. I think the inherent reason that people feel virtuous when they shame fat people is that they are basically assuming and projecting this notion that you have a choice and you're making the wrong choice. So that notion of free will, that you could exert your will, but you're choosing not to, and that's shameful, is an incredibly essential part of this. Yes, and so you'd think Ozempic is obviously a shot, like in your leg. It has nothing to do with your free will. It's changing your, chemistry, and for whatever reason, making you lose weight. Would that change people's mind about it being a free will issue? Well, I don't know, because like pregnancy also makes people gain weight, but nobody is like, oh, let's stop dieting then, because it doesn't make sense to diet because we don't actually have choice over the matter. There's lots of things that makes us gain or lose weight. Lots of drugs, in fact, make us gain weight, often antidepressants. But it hasn't changed our mind about fatness as a choice or weight as a choice. And I'm not holding my breath, even though it would be better. I think we just enjoy shaming people too much. That's my cynical view.
The money angle here, I did a little bit of Google research to look at how much Ozempic costs in other countries. And you will be shocked to hear, which is to say you will not be shocked to hear, that it's about a fifth, maybe a quarter or a fifth of what it costs in the United States. And this is just a standard thing, that the way the drug manufacturers work is that no one will pay that much in other countries, so they don't charge that much in other countries. But people will pay that much in America, so they charge that much here.
It'll certainly be interesting to see as it's flooded the market in the next few months. Like, what's the price going to be in 5 years?
A miracle drug that makes you lose 30 pounds?
35.
That's $1,000.
Yeah, it's going to be like cultural changing. And maybe at some point, going back to the original point, which is the inequality of all this, because if you think about it, it's poorer people that have more diabetes risks and actual diabetes and overweightness. They're the ones who could use it a lot better, like more usefully, rather than being a cosmetic issue. And we'll see if they actually get access to it as the price goes down.
Should we have a numbers round? Elizabeth, do you have a number?
Yeah, it's $114,000, and that's the average salary for an employee at Mitsui & Company, which is a Japanese trading firm. And they just, as a matter of policy, decided that all of their employees can have side gigs. And they specifically have mentioned a YouTube influencer as a potential side gig if you're a Japanese employee at this trading firm. So it's, I think this protest about not having side gigs is probably coming from Gen Zer employees. But I have trouble imagining a similar firm in the US doing this, saying you can have your YouTube influencer gig and still be employed by X trading firm.
Is that a way of they don't raise pay or something? They're like, we're not going to raise your pay, but you can have a second job.
Yeah, they don't want to raise pay, but I guess culturally too, it's become more popular for younger employees to have side gigs, and so there's some demand for it internally.
But isn't Slate Money a side gig for you guys?
Exactly.
Yes,
Slate Money
100%.
is a side gig for us.
You guys are influencers.
Shush. Cathy, don't tell the folks at Axios. They don't know about this podcast. No, the classic example that really springs to mind here is Keith Gill, a.k.a. Deep Fucking Value on Reddit, who's the great, GameStop shill, and he was the one running up GameStop in the early months of 2021. And he had a day job working at like Mass Mutual, I think, like as a financial wellness educator or something. And then eventually when it came out who he was, they fired him. To Elizabeth's point. I have to do this, because I just have to. I'm sorry. But my number is 517,000.
I knew it would be.
Emily knew it would be. Emily, what is 517,000?
Emily's like rolling her eyes, but I have no idea what this is.
It's the 517,000, which I had on my list of numbers, but I knew Felix would front run
I did too.
I'm the high frequency trader jumping in here in the numbers round, getting ahead of you.
It's the number of jobs added in January, more than double what anyone expected. Blockbuster job growth. Oh my God, job market hasn't been this good since 1969. Holy bananas. Stop talking about recession number, right?
Right.
So
this is great. I just need to say a number and then Emily does my numbers round for me.
No, I actually saw that number. I didn't memorize it, but I was like, one of the things that shocked me is that like the market went down as a result. Like, isn't it good news?
Good news is bad news, Cathy. So this is one of the interesting things about the jobs report, right? Or about interest rates in the Fed, is that the Fed raising rates has had a really visible effect on tech stocks, on crypto, on obviously on interest rates, mortgage rates, bond yields, all of that kind of stuff. It's had no visible effect whatsoever on the job market and the number of, on the unemployment rate. And so, like this has become a finance game. The higher this number goes, the more rate hikes people expect. And the more rate hikes people expect, the worse that is for markets. And it's got, and the rate, there's this weird sort of internal loop between rate expectations and financial markets, and the employment market, the labor market, the real economy seems to just blithely go on regardless. But Emily, what's your number? If your number isn't going to be 517,000, what's it going to be?
My number is 50.4. That's a percentage, 50.4%. That is.
Oh, wait. Can I jump in and front run you?
Fine.
Is this an office occupancy number, Emily?
That's correct, Felix. Ding, 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 ding. This is the highest that office occupancy rate has been since we all went home in, not all of us, I know, since March 2020. So the offices are half empty or half full, depending on your perspective. And I guess the Castle, which tracks this data, this is a new record, but it also shows that we're never going back, in my opinion, to the way it was. Offices will remain kind of half full or half empty, but hybrid work is sort of here to stay at this point.
What I want to underscore here is this is not based on some theoretical maximum capacity of offices. This is just based on the pre-pandemic level. They indexed pre-pandemic to 100, and we are now at 50% of pre-pandemic. So everyone knows that offices weren't full pre-pandemic, but now they're only half as full as they were.
Mm-hmm. Yeah, exactly.
Okay, Cathy, bring us home.
All right. So I have a number, and it's 11 out of 30. Ooh,
I like that.
So it's actually kind of two numbers. I kind of cheated, but you can think of it as a fraction if you want it. In Summit County in Colorado, there's a huge number of ski slopes, and there's a 911 call center, and it's getting inundated with what they're calling ghost calls from people's iPhones or iWatches, maybe, because
when you
Apple has
bang
this new
when you
thing
bang
where
the phone,
it assumes that you've had a 911 emergency and it calls the nearest 911 call center for you, and it's just people skiing. But the call centers are like, we hate Apple.
Oh my God.
So 11 out of 30 on a recent day, 11 out of 30 of them were ghost calls. And so it's really wasting their time. And at this point, they've decided to just ignore any automated calls from the slopes. They'll pick up if somebody calls them on a cell phone.
This happened to me, to my great shame and embarrassment, when I was in Ireland writing my book. I was driving back from the supermarket and I threw my phone into the cup holder of my car, and I guess the car was a bit bouncy or something, and the phone just bounced against the edge of the cup holder 5 times or whatever it is. You press that button 5 times and it makes an emergency call. And the next thing I know, I'm like, there's the car's audio system is like, do you have an emergency? Where are you? And I'm like, sorry about that.
Yeah, so I mean, this is just another algorithm that is messed up with a false positive rate that's really, really high. And you'd think at some point Apple might have to pay the costs. The costs are being borne, obviously, by the 911 call centers that are probably busy enough. So it's interesting to me to see like this kind of algorithmic fuck up.
I think Apple will learn about skiing, and will manage to find a way to try and reduce false positives for skiing. But also, I do think that the automated calling from Apple watches and phones has already saved lives, that the true positives are incredibly valuable, and that it's actually worth having a certain number of false positives in order to get those true positives. The exact ratio is one for actuaries and mathematicians like yourself.
Just to be clear, I totally agree with you that true positives are really great. But even that one call center was saying that if they're tied up with ghost calls all the time, they can't actually do their other work. So they're actually failing those people.
Cathy O'Neill, obviously, thank you for coming on. It's great to have you. Welcome back anytime you want. Thank all of you guys for emailing us, slatemoney@slate.com. Thanks to Anna Phillips for producing, and we will be back next week with even more Slate Money.
Hey everybody, it's Tim Heidecker. You know me, Tim and Eric, Bridesmaids, and Fantastic Four. I'd like to personally invite you to listen to Office Hours Live with me and my co-hosts, DJ Doug Pound.
Hello.
And Vic Berger.
Howdy.
Every week we bring you laughs, fun, games, and lots of other surprises. It's live. We take your Zoom calls.
Music.
We love having fun. Excuse me?
Songs.
Vic said something.
Music.
Songs.
Music.
I like having fun. I like to laugh. I like to meet people who can make me laugh. Please subscribe now.